and welcome to Real Estate Today. I am your host, Laura Harbison, broker-owner of Realty Executives Southern Nevada Properties. And today I'm here with Matt Hennessy of Benchmark Mortgage. And we're going to talk about the history of interest rates, like in recent history, the last year or so, what's happened, where they are, what's coming on the horizon. So, Matt, where were we a year ago today?
Sure. I mean, in the bigger picture of almost what you do on a daily basis, working with your sellers and buyers, what we've experienced is it's not so much just the sales price of the home that is prohibiting clients from writing an offer on that particular property, right? It's at the end of the day, majority of our clients are looking at the payment, right? They want to be comfortable today and in the future. So when we talk about interest rates and what the headlines might give them perspective on would be the following, is that in the last couple of days, we've received a gift. This is where the Fed chairman steps out and says, they've been perhaps holding mortgage interest rates, put that to the side, holding the Fed funds rate higher for longer because they were waiting because we saw inflation was a little bit higher. And if we really take into account that as the Fed stepped out at this Jackson Hole meeting here in the last couple of weeks, they indicated that they are starting to see the signs that will give them the opportunity to cut that Fed funds rate. Now, remember, the Fed funds rate is really short-term financing. It impacts interest rates on car loans, home equity lines of credit, student loans. So short-term financing. Yet at the same time, we in our industries are watching mortgage-backed securities or longer-term like 10-year Treasury. What does that really mean for the consumer? We anticipate mortgage rates to trend a little bit lower. But if we really look at it closely, coming up here on September 17th is when the next Fed meeting is, right? The Fed meets 8 times a year to talk about monetary policy. And we know on the 17th is when he stands in front of a podium and he's probably going to indicate we're going to cut that Fed funds rate about 0.25%. This is what 90% of the economists are anticipating. So if we take into account the most recent history, remember last year in September, everybody for better part of 3 years after COVID, as we saw, they raised that Fed funds rate 9-10 times, and to anticipate bringing down inflation, they raised that Fed funds rate so many times, we were waiting for them to see the signs to cut that Fed funds rate. And guess what? They cut in September, October, and December of last year. So while on the surface, that sounds great. Oh, they cut rates several times last year.
But yeah, they brought it up and then...
They brought it up significantly. But if you remember, they brought it down. They cut that Fed funds rate because they started seeing inflation trending lower. But on the other side, they actually saw a strong economy. They still saw unemployment was doing great jobs, et cetera. And when that happened, what took place the very next day, mortgage rates started to climb.
Right.
So much that within that 3-month period, mortgage rates actually climbed about a full percent. So the conversations we're having today is, number one, the markets are enjoying the fact that the Fed has now pivoted. They started to see that inflation has come back down. They are starting to see perhaps a weaker jobs outlook. And to anticipate unemployment going up, they want to make sure, hey, let's not keep that Fed funds rate high enough. Let's bring that down a little bit. So as they start to indicate they're about to do so, I think it's all about what buying the news and selling the fact, wherever it takes place.
Right.
It's really important for us to discuss. Right now, mortgage rates are starting to improve. Headlines are all over. Mortgage rates are the lowest we've seen in probably 10, 11 months. If you take that into account, the beginning of the year, we saw mortgage rates, at 7%?
Yes.
And now in the mid-6s. So for those that are on the fence, your buyers, my buyers that we have conversations with every single day, we see economic reports every day that could influence this outcome. It's not a straight line.
Not one thing.
There you go. And so the news will be all over the place saying mortgage rates have started to trend lower. You'll probably see a big headline, Fed finally cuts the Fed funds rate, or they might even be very general and say cut rates. The conversations that you and I need to have on a regular basis with our clients there are great opportunities right now with both buyers and sellers as we look at the real estate market and say, for those properties that are on the market a little longer, perhaps sellers that price them a little higher than should be sometimes, or they need to move that market or they need to move that property. The conversations we have to have is, instead of perhaps dropping the sales price, which is the very standard response, hey, why don't you reduce the sales price? Solving for home affordability. addressing the issue, which is the payment. There are more times than not where if I was negotiating on the buyer representation, right, if we're having conversations about how to structure your mortgage, if you just reduce your sales price by $10,000 to $15,000 so my client can write an offer, maybe they save their payment. I'm just going to make up an example, $50, $60 a month.
Yeah.
But if you gave that same $10,000 to $15,000 to the client, everybody's a little different with credit scores, down payment, et cetera, but it's about a 3-to-1 savings. So the client has more bang for their buck. And if I was to be honest and say, since the beginning of the year, when rates were at 7 and now we're in the mid-6s, you and I are probably having a purchasing power improvement about $30,000 to $35,000 on average.
Right, based on the interest rate.
Yeah.
Based on the interest rate. And by, again, taking that $10,000 and maybe helping the buyer buy down their interest rate or do so combination or prepaid interest program to help them step into the payment, all kinds of different things that can be done with that. It helps with their affordability and their comfortability. And at the end of the day, everybody gets so fixated on the closing costs, but it's not what you spend, it's what you keep. It's what you put in your pocket when the sale is done. So very often by doing something creative like that, that helps you keep the sales price higher. And at the end of the day, you may walk away with a net check at the closing that's larger than you would have the other way around, because people, again, they get so focused on, the costs or the percentages versus what's the actual outcome. So those are the conversations that I have a lot, because, if you save 0.5%, but it costs you 3%, you didn't save anything, so, but it's hard, I have to show them, and I show people on paper, I go, here's the scenario, here's what you walk away with, here's what you walk away with. And usually that the visual helps.
Sure. And I know, we see two different types of clients, those that are more focused and the pain point really is on the sales price. Oh, yes. I would write please write this offer reducing the sales price because that makes me feel better. Yet on the other side of the perspective, if the payment is the most important thing to them, let alone qualifying for that particular mortgage, but if the payment's most important, then we have to strategize on perhaps not, forgive the French, lowballing an offer and asking for closing costs because I need to buy down an interest rate, but just have good conversations about, here's the property, this is all the details, it's been on the market this long, maybe we can offer this to accomplish the goal that you set out then.
Right, exactly. And then we are in a market where everyone, both sides, can win. I mean, the buyer gets the house that they want. They have houses to choose from. They can get it at a payment they can afford. The seller gets to sell their house. They get their net proceeds. Everybody, comes out where they should on it, which is nice, where it's not so skewed one way or the other.
A lot of opportunities for our buyers today.
Correct. And buyers for the seller's homes, so they can sell their homes.
Correct.
So,
and I think, when we see that, pivot, that transition from those sellers that are taking or looking at an offer, hey, they're asking for closing costs, and I sell the house in the time frame that is perfect for everyone, that seller is probably going to also, when they sell their house, look to purchase another property, maybe benefit from that side as well.
Correct. Because especially if they're buying and selling in the same market. So it's universal. So thank you for joining us today. If you have any questions about what we've talked about today or any other real estate issues, please give us a call. You can see our information below, and obviously anything having to do with financing and various programs, et cetera, that might be available to you that would be best for you, definitely give Matt a call, and we're both looking forward to hearing from you. My office is open 7 days a week, so please reach out. Thank you, and we'll see you next time on Real Estate Today.